If you're thinking about investing in mutual funds, you need to understand what is a mutual fund and how it makes you money before you put out your hard-earned money. Stay right here where I'll be joined today by Jeff Gregory of Desjardins Financial, who's going to explain everything we need to know about mutual funds. Welcome back to Real Estate 101, where today we're going to talk about mutual funds, and I'm pleased to be joined once again by Jeff Gregory of Desjardins Financial. Jeff, welcome back to the show.
Thanks for having me, Joe.
So Jeff, I want to start today's show and ask you, what is a mutual fund?
A mutual fund is really just a pooling of investors and people's money into one grouping so they can get access to a lot of great investments out there. And then what happens is there's a manager, somebody who makes all the investment decisions on behalf of the whole group. And then what happens, everyone just shares in the benefits and the wealth associated with it.
All right, now, do all mutual funds work the same?
Not necessarily. Mutual fund is really, like I said, a bit of a pooling, but they have things such as closed end, so it's not as easily traded, things such as hedge funds. There's different aspects of a mutual fund, so in its generalization, that's all it is. But when you start to unravel the book, there was a lot more layers and topics within it. So not truly all the same category.
All right, so for someone that has interest in mutual funds,
Yep.
How safe is their money?
Like every investment, there's risk on it. So I guess maybe it starts with what you're investing in. You know, bonds are going to have a certain risk with interest rate risk and stocks and so forth. But as a whole, the mutual fund industry has what's called the Canadian Investor Protection Fund. And it's meant to protect everyone's investments up to $1 million. So if a mutual fund company went bankrupt or a mutual fund dealer or something just it went insolvent, every account is at least shielded for that $1 million. And depending on the investment, an RSP, a non-registered account, as long as it's deemed a separate account, they're all for $1 million. So you can be fairly secure in the sense that if they did go belly up, you're not going to lose your shirt either.
Okay, so what do mutual funds invest in?
They can invest in many, many different type of holdings. Some will invest in real estate, some will invest in mortgages, bonds, stocks. There's actually a gold, there's a wide variety of investments, even things called exchange traded funds, which are indexes of everything. So there really is no limit to what a mutual fund can invest in. It's more of what the person is looking at getting into. Sometimes Europe, sometimes the US, sometimes Canada, sometimes bonds, sometimes just cash. So I think it depends on what the expectation or the desire is for success,
Right.
more than really what it's being held in.
Okay, so I've also heard of segregated funds.
Yep.
Are they the same thing?
They're kind of like the same thing. They're the life insurance version of a mutual fund. They'll be invested the same way. They'll look exactly like the mutual fund, but they'll have guarantees and protection within it that will, protect your principal, maybe give you some income for life, stuff like that. So they're usually a little more expensive than the mutual fund, but they give you even more assurances. Every time you use a guarantee, it's always going to cost you a little bit more.
Okay, and why invest in those?
Just for that guarantee, for that security that nothing more or extra could happen. People invest in GICs because they want to know what they're going to get, their money's protected. A segregated fund has those type of guarantees within it. They don't guarantee a return, but they can at least guarantee that your money won't go away 10 years from now. The insurance company will assure you you'll have that. So it's taking a little bit less risk than a pure straight mutual fund would be, but it costs a little bit more.
All right, Jeff, so can you buy mutual funds in RRSPs?
Yep, certainly. It actually is a very common thing to put RSP money into. You can put them in RSPs, RIFs, tax-free savings accounts, education plans, disability, even you can just buy them separately on their own. So it's an investment vehicle. An RSP and all that is just the shell, what you put in the shell, like a good,
it's entirely up to you.
Yeah, like a good regatta, good Italian pasta, you just stuff it with stuff.
Right.
That's what a mutual fund is the meat within the investment vehicle. So yeah, you could put anything into it.
All right, Jeff, so do you have any last words of advice for someone that's interested in the mutual fund market?
Yep, I suggest talk to somebody who knows what they're doing. Get some really good sage advice. There's different types of mutual funds out there. There's different type of providers for mutual funds out there. The banks are one alley, segregated funds. There are pure mutual fund companies, and each one has different costs. Each one has different types of returns. The managers are more successful or not. So don't hesitate to ask some questions. Your advisor should be knowledgeable enough to be able to answer as much as they can, and if they don't, they can get back to you with those answers too. So don't just take the first answer and go. Really worry about your money.
All right, Jeff, good stuff. Thanks for coming on today's show.
My pleasure. Thanks again, Joe.
If you're looking for more information on mutual funds or need the help of a top financial planner, get in contact with Jeff Gregory at Desjardins Financial. I'm your host, Joe Terceira. Thanks for watching, and we'll see you next time.